Hey everybody, so this video is for CrowdStrike. Now their earnings come out tomorrow. This video will be coming out tomorrow, but I'll post it around noon, so it's up before the earnings are released, so you could check out all the information that's available. I may do a update afterwards to show kind of what happened with the earnings and all that, but we will see tomorrow. So basically getting into CrowdStrike today, software company, online business solutions kind of company. But yeah, make sure to subscribe and let's get into it. So CrowdStrike, getting right into it, we'll go through the financials and then we will get into their earnings and a few other things. So starting off with cost of capital, looks like it's right around that 11% mark, which is what we want to see. Target price is $342, which is a little under where they're at now. Long-term growth rate is really solid at 26.8%. That is one of the better ones I've seen. So let me zoom out just a little bit here. And I'll show you their sales. So it looks like they've had really, really good growth over the past few years. Operating income, same thing. They just went positive about 2 years ago. And net income, exact same, keeping up the trend with EPS. And let's look at their total shares. Looks like they have been diluting a little bit, 227 a couple years ago, 244 now. That is not the craziest amount, but it is still consistent dilution for them. So let's head over to the balance sheet, see how everything is doing there. Cash looks really good. They do not have a lot of debt, which is always what we want to see. Assets are good. Short-term debt is barely anything. Long-term debt is very manageable. Their retained earnings are most likely super negative, which they are, but they most likely will be bringing it back within the next few years, I'd imagine. It'll probably be positive very soon. Oops, sorry. Those are negative. And cash flows. So they should be seeing some pretty solid operating cash flow growth, and they are over the past couple of years. All of it, basically all of it coming from funds from operations, which is awesome. That is what we want to see. Investing cash flow looks like it's actually mostly negative from acquisitions, which is the best kind of investing cash flow, negative. For financing, again, they are diluting their stock ever so slightly, which is not great, but it's really not too big of a deal when you consider the difference in cash flows, which honestly, with how positive their operating cash flow is, I'm not sure why they're still issuing stock. It could just be, in this situation, it could just be employees or maybe the C-suite managers, officers that are getting stock bonuses, things like that. It could have something to do with that as well. But and then free cash flow, just really, really good, solid growth over the past few years. So nothing to complain about there. Their cash situation is pretty crazy because they barely have any debt. So recent issuance wasn't for a little while. They issued in 2021, it looks like, and haven't since then. Not really any significant repayments there, so I'm just going to do the 0.5 because their debt situation is not a problem at all. But at the same time, why wouldn't they just pay it off when they have so much free cash flow and cash available? I don't know how companies work too much, so couldn't really tell you. Have been issuing equities consistently, obviously, so no stock repurchases, unfortunately. But honestly, in the long term, with all the growth that they've been seeing, that is really not a big deal. So average net margin at negative 12. They just went positive in their net margin last year. That is excellent. SGA to sales average is 84. They brought it down to 74. Excellent. Net margin, just said it, very good. ROA, ROE are both above average, which is solid. And the long-term debt to total equity is down to 33% from, they were at 88% at one point in 21 when they took out that fairly decent amount of debt. But since then, they have been reducing it drastically, mostly with increases in equity too, which is good. Um, don't get me wrong, their debt is very manageable, but the increase in equity is what's really driving that ratio going down, which is solid. So overall, really good score for CrowdStrike. 84%, one of the higher ones we've seen. CRWD 84. And there we go. So that is locked in there in the table. Now we will go into their earnings and see what their preview looks like. But first, we'll go into their last earnings report and check out the performance that they recently had a couple months ago. So, last earnings report beat on revenue. Actually beat on subscriptions, missed fairly decently on professional services, which is usually, if they are beating in their main segment, that's a better sign. Recurring revenue looks like it increased slightly. Operating margin improved versus the estimate and a year ago. Cash from operations, little bit of a decrease. And deferred revenue was a bit of a decrease as well, but increase from quarter one. Short term, long term, you could look at that. And then billings were a little bit under as well. So overall, an okay earnings report. I think people are really looking for decent outperformance, which I hope does happen, obviously. But here are some of the estimates for them. So revenue coming in at 982 versus the guidance, which was, it's closer to the, actually basically dead in the middle of that guidance, mostly from subscriptions or professional services. Does not look to be, so it was at 45 million, it will be at 48, which is a pretty decent increase. Operating margin down to 17.2% compared to 23.5. So we'll have to see if they beat on that. If they do, it should be pretty significant. And then overall for the fiscal year guidance for 2025, they're looking at 3.9 billion in revenue, operating income at 780-ish. If I could show the comparisons of the past year for that. So for fiscal year 2024 in revenue, they had just over 3 billion, and they're looking to, they're looking to go all the way up to just under 4, which is really solid. And then operating income was at 68, and they're looking at an operating income of 780 million, which is massive improvement, obviously. Should be really, really solid. Revenue has beaten consensus 19 of the past 20 quarters, and the one that they missed was just in line with it. EPS has beat 18 of the past 18 quarters. So most likely they are going to outperform on their earnings. There's a very good chance of it. I will show the CWRD stock as well. And why did that not work? CRWD, that's why. So they are in a channel, which I've actually been following this channel for a while now, and they are at the top. Now, if they outperform on earnings, they could break out of this and see all-time highs very, very soon. If they miss their earnings, or it's not as spectacular as people have always hoped for nowadays with massive outperformances, even when you have a decent earnings report, your stock still goes down nowadays. It's crazy stuff. But if they outperform and they beat across the board, we'll most likely be seeing all-time highs within probably a week or two. Maybe even less than that. It could literally just come tomorrow. It's not that much of a jump up, so it could definitely be on the table. But I think that's it for CrowdStrike. Hope you got something. Hope you learned something. Make sure to subscribe, and I'll see you next time.